Unemployment is higher in California than it is elsewhere. It's been like that for a little while. The bigger problem, in my mind, are not the big macro numbers. It's the quality. When you peel those numbers apart and you look at the quality of, say, job creation, we're not creating the kind of jobs that people can afford to live on here. If you look at since COVID as an example, 79% of the jobs created in California, or of the jobs total in California, pay under the U.S. median income. California median income is always higher than the U.S. median income by a substantial amount. These are jobs that pay under the U.S.
79%.
79% of the total jobs. So you think about it, if it were just statistics and math, right? If you have medians, it should be 50% above, 50% below. 79% of the jobs in California pay under the median income for the United States. That's not good. Now, that's since COVID. Before COVID, it was also high. It was in the 60s, but now it's really shot up quite a bit. So the number of jobs being created are being created in these low industry sectors.
Now, you mentioned that we heard the population came back. There's an uptick. You think the trend is still down. Can you tell us what's the trend look like, and why do you believe that the trend is still down and this is not a change for California?
I do think the trend is still down, and I think that at the core of population moves are people trying to find jobs and trying to find housing for their families. That hasn't changed. Housing in California is still a problem. Now, it's going to be very interesting to see what happens with all of these wildfires and the fact that we're now going to have to rebuild a whole bunch of housing. Maybe that could actually be it, the potential for having affordable or more affordable housing, although I kind of doubt it. But the things that drive people to leave a place are trying to find basic housing that they can afford and the jobs that pay them something. And right now, the rate of job creation in places like Texas and Utah and Arizona, which have lower costs of living than we do, are just going higher than ours.
You see this trend not changing, population growth in California. You don't think it's coming back because the jobs are somewhere else in other states, and then housing cost of living is a lot lower there, so you assume that people will keep moving from California to these other states. Why do you think the jobs are going to those states versus coming to California?
This is a great question, and it's not just that jobs are moving to other states, it's the kind of jobs that are moving to other states. If you look at the population moves, the people who have been moving out of California are exactly the people you want to be in California. These are people who are smart, who are making well above the average pay. And so the companies that employ those people are moving out of state, and they're moving along with them. And so we're seeing a defection of the $200,000 to $400,000 a year job and the kind of person that would have that job. And what we're replacing it with are people who can't afford to live here with low-end service jobs in the hospitality industry, healthcare industry, which of course we want them. We want those jobs, but we also need a balance of people who are what I call part of the innovation or advanced economy. And so my worry is that as we lose this seed corn of future economic growth that comes from talented people who can apply their brain power in a world which can create significant value, that California won't get its share of that. And we're seeing some of that already happening.
Tell us more about this seed corn. Like, what does it look like?
So what do I mean by seed corn? Seed corn is what you plant in order to be able to grow things in the future. People have the same characteristics. You want people who can add value later on. So you want to be able to keep the people who have the greatest potential to contribute to the economy. You'd like to keep them here. A, you want them to work in a job. B, you'd like them to use their creativity to be able to start new businesses. You'd like them to be able to come up with new ideas that require investment in the state and growth in the state. That's what I mean by seed corn. And so if you're a big company like, let's say, you're Oracle or you are McKesson, you've moved your corporate headquarters out of the state. Well, what does that mean? That means that some really smart executives, really smart professional services people that work with those companies, they move along with them. Well, what does that mean for the potential for innovation in a state? That's not a good sign. We're starting to see this already. If you look at the data of what gets produced in sectors of the economy that have been historically associated with innovation, let's say the information economy, which, by the way, includes what you do, as well as computer services and people like that, we are now producing less output from California than the rest of the country. The change in how much we've added to the economy through information-related industries is lagging the United States. We used to way outperform the United States.
So we are lagging the average?
Yes, so the growth isn't coming from here. Yeah, we're lagging the average. The U.S. as a whole is outproducing us. If you look at the GDP of the information sector.
Per capita?
It's overall numbers.
We used to lead, right? Is that
we used to lead?
How much?
Historically, we had at least a 1 to 2%, sometimes 5 percentage point incremental growth rate over the rest of the country in information services. They're now ahead of us. The rest of the country is growing faster in those areas.